crosses, and we'll spice it up with two other things. So, speaking about the crosses, we'll begin from Euro Swiss. I believe the Swiss National Bank is intervening here. If you're trading this pair, use a lot of caution, okay? It's quite messy. So anyway, T for me is the line in the sand, but perhaps market forces are stronger than the Swiss National Bank. Anyway, we've seen also, we can mention 106.90 as some kind of resistance. I believe the Swiss National Bank will push it back into range. The range is 108 to 110. 106.90 should be watched, and 107.60 for now. Euro pound, quite crazy moves here. We've seen the pair move, fall from 90, currently at 85.90. So resistance here at 86, 86.50, and 87.15, and further above 87.70. Support at the round number of 85 and 84.20. Euro yen moving a bit to the upside as we speak. 117 because of the weakness of the Japanese yen. 117 is support, followed by 115.80. Further support at 114.50, if I'm not mistaken. Let's not the currency pair focus on. 114.50, 113.80, 112.80, 112, and 111. But if we move further to the upside, we have 118.50 and the round number of 120. 118.50, you can see it's a double top over there. Last seen, in the summer. Pound yen, the Gepi, the Dragon, crazy pair, currently 136.30. Further above, 140, followed by 143. To the downside, we have 132.50, 129, and 125. Crazy moves here. Today, relatively quiet day, just 100 pips. Again, these pairs should be traded with care, a lot of care. I know it's a very popular cross. Okay, we covered the crosses, but let's add a look at dollar Mexican peso. Here we had a move all the way to 21.40. Trade relations could be worsened even if there's no wall. The round level of 20 works as some kind of support, followed by 18.20. That's the range, and 17.80. To the top side, of course, we have 21.40. We have some stabilization there. Speculation about the next moves of the Mexican government, Trump. But let's see. And another thing to top off for crosses is the price of oil, as we usually do. 45.60 is the current level. We bounced off support there at 42.50. Strong resistance only at 49, followed by 52, which is a double top. If we fall further to the downside, it's below 42.50. It's 39. A lot depends on that OPEC meeting. Okay, so that concludes our segment about crosses. I see here a question by FX Ambassador, who says, I think the pound move is a sell on a rally. Let's look again at the pound. The pound currently, the pound does have reasons to rally. Yesterday it fell because of inflation, but it does have reasons to rally. I will mention a few. We have the British pound enjoyed Super Thursday just 2 weeks ago. Let's remind everybody what happened. We had good data from the UK, positive services PMI, positive PMIs in general. Let's see if data worsens this week. The first data point was weak. But the second thing that was good for the pound was the court ruling. The British High Court ruled that Parliament must discuss Brexit. Only Parliament can trigger Article 50. That means there could be a delay. Parliament will probably not defy the will of the people that want to leave the European Union, but it means a delay. There is still an appeal to the Supreme Court in early December. The third good thing that happened to the pound is the rate decision by the Bank of England, the big rate decision with the quarterly inflation report. And Mark Carney told us that they're now moving from a dovish bias to a neutral bias. Rates can go either way. They can even raise rates. Why? Because the economy is not tanking as much as expected. The weak pound is pushing exports higher and also pushing inflation higher. So there's no need to cut rates.